Today's discussion centers around a fascinating new ETF, the Roundhill S&P 500 ODTE Covered Call Strategy ETF, or XDTE. It's making waves with its unique approach to investing. What immediately strikes you about this fund's strategy?
The use of zero-day-to-expiry, or ODTE, options is certainly unconventional. Most covered call strategies use options with longer expirations, but XDTE's daily reset offers both intriguing potential and significant risk.
Intriguing potential and significant risk. A perfect summary. Let's unpack that. What are the potential benefits of this daily reset mechanism?
The main benefit is the potential for consistent income generation. By selling ODTE calls each morning, XDTE aims to capture daily premiums while maintaining overnight exposure to the S&P 500's price movements.
So it's a daily income stream, but with the potential for significant upside if the market performs well overnight, right? The fund's marketing materials highlight weekly distributions and income potential. Can you elaborate on how these distributions work and what investors should expect?
XDTE aims to pay weekly distributions from the option premiums collected. However, it's crucial to understand that these distributions might exceed the fund's income and gains for the tax year. Any excess is treated as a return of capital, impacting tax implications.
That's a key point for investors to consider. The return of capital aspect means that the distributions aren't necessarily all profit, right?
Precisely. A portion of the distribution might represent a return of the investor's original capital, not actual profit. This is a crucial distinction for tax purposes and overall return calculations.
The fund's description mentions harnessing volatility. How does the ODTE strategy aim to achieve this?
The strategy attempts to profit from market mispricings inherent in ODTE options. These options are highly sensitive to short-term price fluctuations, creating opportunities for the fund managers to capitalize on these movements.
So they're essentially betting on short-term market inefficiencies. Can you illustrate the options strategy with a simple example?
Imagine the S&P 500 is at 50. XDTE buys the index and sells a covered call with a strike price of 55. If the price stays below 55, XDTE keeps the premium. If it rises above 55, the upside is capped, but the premium is still earned. Overnight, the options position is closed, leaving the fund fully exposed to the index.
That's a clear explanation. The risk then is that the S&P 500 could drop significantly overnight, wiping out any gains from the option premiums. I see. The provided data shows a positive performance since inception, but past performance is not indicative of future results. What are the key risks associated with investing in XDTE?
Several risks are inherent in XDTE's strategy. The covered call strategy itself limits potential upside. ODTE options are extremely volatile due to their short lifespan, increasing the risk of significant losses. The fund's synthetic nature also introduces complexities.
The synthetic nature, can we elaborate on that?
XDTE doesn't directly hold the S&P 500. It uses options to replicate its exposure. This synthetic replication might not perfectly track the index's performance, leading to deviations in returns. Liquidity in ODTE options is another concern.
So the fund's returns might not always mirror the S&P 500s, and there's a risk of not being able to exit positions easily if needed.
Right. Let's look at some fun details. What's the expense ratio and what are some of the top holdings?
The expense ratio is 0.95%, which is relatively high for an ETF. The top holdings are primarily ODTE call options on the S&P 500 index, with specific strike prices and expiration dates varying. The exact composition changes daily.
A high expense ratio is something investors need to factor into their potential returns. The daily changes in holdings make it difficult to track, doesn't it?
Absolutely. The dynamic nature of the portfolio requires a deep understanding of options trading and the associated risks.
We touched on the tax implications of the distributions earlier. Is there anything else investors should be aware of regarding taxes?
Yes, the weekly distributions might be taxed differently depending on whether they represent income or a return of capital. Investors should consult a tax professional to understand the implications fully.
And how does the active management aspect of XDTE affect the investment strategy? The fund is actively managed, meaning the investment decisions are made by the fund managers. This introduces manager risk, a possibility that their decisions might not always be optimal.
So the fund's success hinges on the skill and judgment of its managers. Makes sense. Are there any other significant risks we haven't discussed?
Yes, the fund is relatively new, so it has a limited operating history. This lack of historical data makes it harder to assess its long-term performance and risk profile. There are also risks associated with the use of derivatives and the potential for concentration risk.
So a lack of historical data, derivative risks, and the potential for concentration in specific options contracts all add to the overall risk profile.
Right.
This discussion has highlighted both the potential and the risks associated with XDTE. It's a high-risk, high-reward strategy that's not suitable for all investors. Thank you for clarifying these important points.
You're welcome.
To summarize, XDTE offers a unique approach to S&P 500 investing, aiming for daily income generation through ODTE options. However, the strategy comes with significant risks, including volatility, limited upside potential, and complex tax implications. Investors should carefully consider their risk tolerance and seek professional advice before investing.
I agree. Thorough due diligence and a clear understanding of the strategy's intricacies are essential before committing capital.
It was a great discussion.